Hello everyone. The India and USA trade deal discussions are going on for several months, but it seems that the two countries have finally reached on brink of signing the deal any day now. The question that you have to ask yourself is your portfolio ready to fly with the positive outcome of the deal? In this video, I'm going to share top 5 sectors of the Indian share market which are going to get benefited the most from this trade deal. I'll also share the top 5 companies of each of these sectors whose major source of revenue is export to the America. Finally, I'll share the list of top 10 companies from across the Indian share market who have highest percentage of their annual revenue from export to USA. So let's get started. Before moving on, please read the entire disclaimer carefully. This video is for educational purpose only. There is no buy, hold or sell recommendation. So before moving on to the sectors, there are few important things to consider. Once the deal is signed, there are few things which you as an investor has to consider. First is details matter. The actual impact will heavily depend on the specific details of the final agreement, including the exact tariff cuts, the commodities covered, and the clauses related to market access. Second is pricing in. Some market optimism regarding a potential deal is likely already factored in into the stock prices of most relevant export companies. A positive surprise, that is a better than expected deal, could trigger a significant rally, while a muted or less favorable agreement might lead to a sell off. So, a very important point. And the third thing to consider is the broader market versus sector specific. Now, most analysts anticipate that the deal will cause a sector specific rally in the affected export industries rather than a major broad based market movement. Okay, so now let's move on to the sector. So, the first sector which is going to get benefited the most is the textiles and garments sector. This sector has been significantly impacted by the higher US tariffs, which is up to 50%, imposed on Indian goods. A trade deal that substantially reduces or eliminates these tariffs would provide immediate and significant relief, boosting the competitiveness of Indian textiles, apparel, and home furnishings in the US market. Companies with high US exposure are particularly sensitive to this change. Now let's check out few companies from the sector having highest exposure to US markets in terms of percentage of their annual revenue. So now this table shows that the first company is Gokaldas Exports. Gokaldas Exports focuses on apparel manufacturing garments, and the percentage of their revenue from export to US and North America is around 70 to 80%. So very high percent. Next is Wellspun Living. It focuses on textiles, towels, bed, and linen. 60 to 65% revenue depends on the export to US. Next is Himat Sinka. It focuses on home textiles and luxury bedding. 50 to 60% revenue depend on the US. Trident Limited, home textiles, towels, bed sheets. 35 to 45% depends on the exports to North America. And finally, Arvind Limited. Arvind Limited focuses on denim, woven fabric, and apparel, and 30% of their revenue depends on the exports to US. Okay, now let's move on to the next sector, which is gems and jewelry sector. Now, similar to textiles, this is a major export sector that has faced pressure from the retaliatory tariffs. A tariff reduction would directly improve margins and sales volumes, making Indian diamonds and gold jewelry more price competitive against global rivals. So let's check out few companies from this sector having the highest exposure to US markets in terms of percentage of their annual revenue. So the first company is the Webhub Global. Webhub Global focuses on fashion jewelry, accessories, and lifestyle products. 75 to 80% of the revenue is through exports to US and UK. Next is Guldium International. It focuses on diamond studded jewelry exports. 70 to 75% of their revenue comes from North America market. Next is the Rajesh Exports. It focuses on gold and diamond jewelry trading. It has a very high export exposure to global, where US is the major market. Next is the Asian Star Company. This company focuses on diamond cutting and polishing. Uh, the company has very high export exposure to the US market. And finally, Renaissance Global. This company focuses on designer jewelry exports, and again, a very high export exposure on this company as revenues as well. Let's move on to the third sector, which is the electronics manufacturing services sector. While certain electronics like mobile phones have sometimes been tariff exempt, a comprehensive deal is expected to provide a much clearer and more stable trade environment. Companies involved in mobile and component exports to the US, especially those benefiting from government schemes like the PLI scheme, could see accelerated growth as trade friction eases. Let's check out few companies from this sector which have a high dependence on the export to US. First one is the Dixon Technologies. Now, Dixon Technologies focuses on contract manufacturing. It's high volume for global brands growing US bound exports. Next is Ember Enterprises, AC and component manufacturing business. Again, high dependency on US. Sirma SGS Technology. This company focuses on electronic manufacturing services. It's had strong export focus. Again, US is a very big market for this company as well. Next is Keynes Technology. This focuses on EMS and defense electronics. It has high focus on export markets and global clientele. And finally, Reddington. This is the company, I guess, which works for something to do with the iPhone production in India. So the major focus is IT and telecom product distribution. It manages supply chain for global IT and tech products. So these companies too are basically heavily relying on the US market. Now let's move on to the fourth sector, which is the pharmaceutical sector. Pharmaceuticals is already a strong Indian export to the USA. A trade deal could solidify market access, simplify regulatory processes, and potentially provide clearer terms regarding drug pricing and intellectual property, which would be a long term positive for this sector. Let's check out the companies from this sector having highest exposure to US markets. So the first one is the Gland Pharma. Gland Pharma focuses on injectables. 50 to 55% of their revenue comes from the US market. Next is Dr. Reddy's Laboratories. It focuses on generics and APIs. 50 to 55% revenue from North America. Next is Orbindo Pharma. Generics and APIs again. 45 to 50% from US market alone. Zydus Life Sciences focuses on generics and specialty. 40 to 45% revenues from US market. And the fifth is Lupin Limited. It focuses on generics and APIs, and 35 to 40% of its revenue come from North America. Okay. Now let's move on to the final sector, which is the information technology sector. Now, information technology sector, though not a tariff focused sector, it is highly sensitive to US policy, particularly regarding H1B visas and cross border data flow. Clarity and stability on these issues, which may be addressed in the broader trade agreement, could remove a major operational uncertainty, improving the outlook for large cap IT service companies. So let's check out a few of the companies from this sector having a very high exposure of the US market. So at number one is Birla Soft. Now, Birla Soft is a mid-cap IT services company. It is having 85 to 90% of its revenue from North America market. So heavily dependent on the American market. Next is Emphasis. It focuses on IT services, mainly on banking in that too. 80 to 85% from North America. Next is Persistent Systems. Software and digital engineering is the focus for this company. 75 to 80% of the revenue is from North America. LT Mindtree, large cap IT services company, 70 to 75% of the revenue is from North America. And finally, Wipro, one of the largest IT companies of India, and 60 to 65% of their revenue is concentrated in North America. So extremely uh, reliant on the American market, these companies. Now let's move on to the top 10 companies from across the Indian share market, which have the highest exposure to the uh, US market in terms of percentage of their revenue. Okay, so let's see. Number one is Sagility India. Now, Sagility India, it works in the IT and BPO sector, healthcare BPM, but almost 100% of its revenue comes from American market. So this company is basically is going to achieve a lot in if this deal goes through, a fair deal goes through. Next is Goldium International. We have already seen that gems and jewelry sector company, more than 90% of revenue from American market. Oracle Finance Services Software, OFSS company, it is an IT services company, basically working in the financial software. More than 96% of their revenue comes from the American market. Then is the emphasis. We have seen that IT services and consulting company, around 83% of the revenue comes from the American market. Gokaldas Exports, apparel and manufacturing company, 80 to 85% revenue is from the US market. Persistent System, IT services and digital transformation company, 79% of its revenue comes from the North America market. Granules India Limited, so this is a pharmaceutical APIs and finished dosages company. 77% of its revenue comes from the North American market. LTI Mindtree, IT services and consulting company, 73% revenue comes from the North American market. Birlasoft, IT services and digital, 67 to 70% of the revenue comes from the North American market. And finally, Zansar Technologies, it again works in IT services and consulting. Around 67% of its revenue comes from the North American market. So we have seen top five sectors, we have seen top five companies of each of those five sectors, and we have seen top 10 companies as such whose revenue, basically a majority of their revenue depends upon the services or the products they export to US market. So these companies are stand to benefit the most. These sectors are stand to benefit the most in case a favorable trade deal uh, comes to an agreement on. Okay, so that is all from my side in this video. I hope your portfolio is structured in such a way that it will fly with the signing of the India US trade deal. Thanks for watching this video. Please like, share, comment, and subscribe to the channel. Goodbye and happy investing.